Which stocks has Mohnish Pabrai been buying and selling? Well, in this video, you guys are gonna find out. Firstly, who is Mohnish Pabrai? Well, Mohnish Pabrai has been nicknamed the Indian Warren Buffett thanks to his value investing approach. He's also an incredible storyteller, a great guy to follow, and he's more of a smaller investing legend in the fact that his portfolio is around $217 million with around 18 investments compared to some of these other portfolios which have billions upon billions of dollars. So that's what makes Mohnish Pabrai very interesting. He's very relatable to the average investor, and the type of stocks he invests into are usually quite relatable, and he really does like 10 baggers, 4 baggers, 5 baggers, these type of stocks which can really increase your wealth substantially. So that's why he's a very interesting guy to follow. In this video, we're going to be using a website called investwithlegends.com, which is a fantastic software platform which tracks all these legendary investors. I'm actually near enough the owner of this website now, so I call a strategic partnership with them, and basically you can track all the different legendary investors, Warren Buffett to billionaire Bill Gates, Charlie Munger, and much, much more. So in this video, we're going to dive into Mohnish Pabrai. So kicking things off, guys, stock number one, which I'm going to dive into, is Alibaba.com with the ticker symbol BABA. Now, the reason I'm covering this stock is it's a very interesting one for Mohnish. So he basically invested heavily into the stock, which I'll show you right now on investwithlegends.com. So if you look right here in Q2 2021, basically, Mohnish was buying this stock for around $237 per share. And then in Q3 2021, he sold 77% of his shares despite being very bullish on the company. Now, I'm still going to cover the stock in this video because it's a very interesting company to cover. I don't think he's lost faith in the company. And I did do a video previously, which I'll link to below, on exactly why I think he did sell Alibaba stock. One of the reasons could be selling the stock to offset some tax. Another could be he could be selling the stock to repurchase it in Hong Kong. I've dived into all that in a previous video. Many call Alibaba the Amazon of China, founded by the legendary Jack Ma. The company's faced a lot of pressure recently from the Chinese government with regulation, etc. And Jack Ma actually went missing for a period of time. So maybe that's why the share price has slid down massively. So the stock's down 32%. Could this offer a potential buying opportunity? I do think so, yes. So the market cap for this company is $500 billion, so $500 billion company. This is not a small company. This is one of the largest companies in the world, but it's still growing massively. For example, Alibaba owns a variety of many different companies. They even own a large portion of a company called AutoX, which is just starting to roll out autonomous vehicles. But hopping into the main business model of Alibaba, you can see how this company is made up. So you've got Tmall here. So this is the Chinese retail marketplace. We've got Taobao. We've got the new seed businesses which they invest into. So Taobao Grocery, which is very similar to Amazon Fresh. They've also got cloud computing, so Alibaba Cloud, which is very similar to Amazon Web Services. You can see the pattern here. Also got AliExpress, wholesale Alibaba, where you can import stuff from China. So yeah, this really is a ubiquitous company. I look at Alibaba as a company, it's basically like investing into a Chinese technology ETF, because you're getting all these different companies in one stock. Okay, so hopping into the juicy financials. So Alibaba, despite its size, has grown its revenues by 63% over the past period. To put that in perspective, guys, generally I say a growth stock is one growing between 15 and 20% per year. 63%, incredible growth. Hopping into my advanced valuation model, which I've completed for this stock. Remember, if you guys do want to access this and all the other stocks in my stock research platform, the deeper analysis and the buy points, then feel free to check out that first link in the description below. You can also check out our ultimate investing strategy course. So hopping into the discount and cash flow model and the buy point for the stock, we can see the fair value is around $200 per share. Now, the stock's currently trading $300 per share, so it's looking to be 31% undervalued. So yeah, it could be a potential buying opportunity for Alibaba. I personally do own shares in this company, full disclosure for you guys, and I have been generally loading in there. I don't really like really large companies because they tend to actually grow a lot slower in the long term. However, it is a nice safe bet if you do want some ballast in your portfolio. The main risk with this company is the China risk again. Political risk, trade war, that will cause a lot of volatility with the stock. Also, the way Alibaba is set up, you don't really directly own shares in the company. You own shares in some shell company in the Bahamas. So apart from those issues, which you do get with a lot of Chinese companies, then Alibaba seems like a great investment. Okay, stock number 2 I'm going to dive into is Micron Technology. So Mohnish Pabrai was buying the stock for an average price of $38 per share. And since then, the stock's increased by 98%. So that was his legend buy price, $38 per share, 98% increase. So it's around $76 per share at the moment. They're headquartered in Idaho in the US, but they have manufacturing in Taiwan and various parts of the world. And basically, this company makes RAM for computers, mobile, cloud computing applications. So if you've ever seen this RAM here, Crucial, and you've ever changed RAM for your computer, random access memory, then most likely the RAM you would have purchased would have been from this company. So this is what this company makes. They also make USB flash drives. But the real interesting thing with this company, the competitive advantage of this company, because I have done a lot of research into this one, is there are only a handful of semiconductor manufacturers with the capability to produce DRAM chips. They are Micron or Crucial, Samsung, and Hynix. So there's a very few companies who actually can produce these to the quality and the quantity which many customers require. And this is one of those companies. The company also has a heap load of patents. So hopping in here, the company has 44,000 patents. So that's really as a moat around the business and stops many other companies from doing the same thing. So they have a technology advantage and a manufacturing advantage. So the company operates in 17 countries with 13 manufacturing sites and 14 customer labs, and they have over 40,000 team members. So this really is a beast of a company, but one which is also growing quite fast. So their markets include data center, PC and graphics cards, and also mobile and intelligent edge. So with the rollout of 5G, that will benefit this company hugely. The company's also constantly innovating, and they're spending around $2 billion each year on R&D. Now, I did a real deep dive valuation model again for this company for you guys. So hopping into my advanced valuation model, all the factors taken into account, I estimate the value per share to be around $50 per share, and that correlates with another discounted cash flow model. So if the stock dropped to $50 per share or less, then that's when I would load up the truck on Micron Technology. And when I say load up the truck, for me personally, I have a 6-figure portfolio. So for me, loading up the truck, I'd put probably 30K in, 25K in a company like this, assuming the fundamentals haven't changed. But only if the stock drops to around $50 per share, and for a reason which doesn't affect the company's fundamentals. And on to stock number 3 is Seritage Growth Properties. Now, this is a really interesting stock also. So Mohnish was buying the stock for around $13 per share, and since then it's increased by around 16% to around $15 per share. Here we can see the share price around $38 per share, February 2020. It fell off a cliff down 78% when obviously the global pandemic hit. Mohnish saw this as a potential buying opportunity, and he loaded up the truck, and that increased by 175%. So it's clear, be fearful when others are greedy, and greedy when others are fearful. Market cap $800 million. This is what's called a REIT, real estate investment trust. So these own a variety of commercial properties, and basically the rents from those properties get shared out to investors as a style of dividend. So those are the top 3 stocks in Mohnish Pabrai's portfolio, which he has been buying. So if you did find any value in this video, feel free to give this a big thumbs up. That helps out tremendously with the channel. If you haven't subscribed yet and you do want more investing tips and exclusive stock market picks, of which I'm personally investing into, then go ahead and hit that subscribe button and turn that notification bell on. And with that being said, I hope you guys all have an incredible day, and I'll see you in my next video. Invest safe.